You need to hear this right now, because if you miss what is coming at the end of January, you do not just lose time. You could lose as much as $2,400 that is already supposed to be yours. The most dangerous part is that no one is going to warn you twice. There is no follow-up. There is no phone call. No one knocks on your door. The deadline simply passes, and once it does, that money is gone. Not delayed, gone. Real Social Security money that was meant to help you pay for groceries, prescriptions, rent, and utilities can be quietly erased just because a date on the calendar slipped by. If you are watching this in January, especially right now, you are directly in the danger zone. What makes this so upsetting is that this is not some future promise or political talking point. This is real money tied to real benefits that people already earned over decades of work. Every single year, thousands of seniors miss out on it. Not because they did anything wrong, but because the system never clearly tells them what action is required. A single letter gets mailed, one notice, no bold warning, no urgent language. If it gets set aside or overlooked, the opportunity disappears without a sound. February arrives, the bank balance feels tighter, and most people never even realize why. It is important to be honest about this because this is one of those moments where clarity matters more than comfort. Hardworking people who paid into Social Security their entire lives lose money they absolutely deserved simply because no one explained the rules in plain language. The system is confusing by design. It is layered, technical, and full of deadlines that do not feel urgent until they have already passed. The people who suffer the most are the ones who can least afford to lose even a few $100s a month. The key thing you need to understand is that the end of January is not a suggestion. It is a hard cutoff tied to specific Social Security adjustments, corrections, and supplemental benefits connected to the previous benefit year. Miss it, and even if the government later admits a mistake, they may only fix your payments going forward. The money you already lost is usually not recovered. That is why this moment matters so much. Most people are trained to think Social Security is automatic. You file once, the payment shows up, and that is it. But that is not how it actually works. Behind every monthly deposit are layers of calculations, eligibility checks, verifications, and time-sensitive windows. If something is off even slightly, the burden is on you to notice it and respond before the window closes. Silence is treated as a decision. Social Security does not operate on a simple paid or not paid system. It runs on windows, and those windows open and close whether you are paying attention or not. The January deadline is one of the most important closing windows of the year, and it controls far more than most seniors are ever told. It is tied to the final processing of benefit adjustments, corrections, and supplemental claims connected to the previous year. Once that window shuts, it does not matter if you were eligible or fully entitled. The system moves on. A common misunderstanding is that missing a deadline only causes a delay. People assume the money will show up later. With Social Security, that is often not true. Missing this cutoff can permanently eliminate your ability to collect money for the period that just ended. The agency may correct an error going forward, but they will not go back and pay you what you missed. That is why this date is so dangerous. It feels administrative, but financially it is final. Right now, the agency is closing the books on the previous benefit year. Any income changes, eligibility updates, benefit recalculations, or supplemental qualifications tied to that year must be reported and processed before the end of January. If you became eligible for a higher benefit but never formally requested the adjustment, this is the last chance to do it retroactively. If there was a mistake in how your benefit was calculated, this is the final opportunity to dispute it and recover money you should have already received. If you qualified for additional assistance but did not complete the verification process, the system assumes you did not want it. This is where the $2,400 figure comes from, and it is not exaggeration. It is a realistic total based on very common gaps in how benefits are handled. One part of it comes from the cost of living adjustment. The annual increase is applied to whatever base amount the system believes is correct. If your original benefit was calculated too low, even by a small amount, every increase after that is also lower than it should be. Over the course of a year, that gap grows quietly. $50 here, $70 there, month after month. When you add it up, you can easily be hundreds of dollars short without ever seeing a clear error. Another part comes from retroactive payments. These happen when Social Security later acknowledges that your benefit should have been higher or adjusted earlier. Back payments are possible, but only if you request the correction within the allowed time frame. Miss that window and the money does not roll over. They fix your check going forward, but the months you were underpaid are treated as lost history. That alone can amount to thousands of dollars if the mistake went unnoticed for most of the year. Then there are supplemental benefits, where many people lose the most without ever realizing it. These include programs that reduce Medicare premiums, provide additional monthly assistance, or offer credits based on work history, delayed retirement, or state-level supplements tied to your federal benefit. Many of these programs require annual verification, not a new application, just confirmation that you are still eligible. If that paperwork is not submitted by the end of January, the benefit does not pause. It ends. When you add up even a modest supplement over 12 months, it becomes very clear how people lose $2,400 or more without ever intending to. What makes this so frustrating is how quiet it all is. There is no alarm, no flashing warning, just smaller deposits, missing adjustments, and money that never arrives. That is why so many careful, responsible people fall into this trap every year. A major reason this happens is how the agency communicates. Notices arrive in plain envelopes that look like every other piece of government mail. No urgent labels, no warnings that money is at risk. One letter is considered sufficient notice. After that, the responsibility shifts entirely to you. Most people plan to deal with it later. Days turn into weeks, and before they realize it, the deadline is gone. Often the request is simple: income verification, confirmation of living situation, updating banking information, acknowledging eligibility for a benefit you did not even know existed. If that step is not completed on time, the system assumes you are no longer eligible. There is no follow-up explanation. The payment is reduced or disappears, and by the time questions are asked, the window to recover the money is already closed. Not everyone is affected in exactly the same way, but some people are at much higher risk. If you started receiving benefits within the last couple of years, this is especially important. Initial calculations are where many errors occur. If even one earnings year is missing or underreported, your monthly benefit can be permanently reduced. There is a limited time to dispute that calculation, and for many people that window closes at the end of January following their first full benefit year. People who have transitioned from disability benefits to retirement benefits are also at high risk. The coordination rules are complex and mistakes are common. If the amount looks wrong and it is not challenged before the deadline, the incorrect amount can become locked in for the year, costing you hundreds or thousands over time. Widows and widowers are another group that is often underpaid without realizing it. Survivor benefits have their own rules, and Social Security does not automatically pay the highest possible amount. They pay what you applied for, not what you might qualify for. If that is not reviewed and corrected in time, money is left on the table. Missing the deadline has serious consequences. Retroactive payments tied to the previous year are permanently lost. Supplemental benefits that were not re-verified are terminated. Appeals are considered abandoned and must be restarted from the beginning. One-time credits that exist only within specific windows disappear forever. Even if you were fully eligible, the opportunity expires. The good news is that there are steps you can take right now. Go through every piece of mail you have received from Social Security in the past several months. Look for words like deadline, verification, response required, recalculation, or review. Those letters require action. Log into your Social Security account online and check for alerts or messages. Review your benefit amount and ask whether it makes sense based on your work history. If something feels off, investigate now. If you receive any supplemental assistance, confirm that all verification paperwork has been completed. If this feels overwhelming, that is understandable. The system was not built to be intuitive. Getting help is not a failure. It is a smart move. You can contact your local office, schedule an appointment, and ask clear questions. You can seek assistance from nonprofit or senior advocacy organizations that specialize in this exact issue. What matters most is that confusion does not turn into inaction. This money is not a gift, you earned it. The end of January is not flexible, and once it passes, your options shrink dramatically. Take action now. A small effort today can protect your financial stability for months to come.